Okay, so this was yesterday's trade that I took. So this is just a recording of yesterday's trade. As you can see here, I started off by selling. This is when I didn't know what was going on in the market. So I just played. Ish, I'm going to speed it up. I think here I was looking at something else. So the recording paused because I moved away from the screen. So that's why price is looking still here like this. Then it will show after a lot of candles have formed because it was busy moving in the background while I had navigated away from the rainbow. So at this point, what I was looking for, if I was right, straight, price should have broken this low. The fact that it was still playing around here and it didn't move, it showed me that we are still in a range. And another signal is that if it broke this high here, then it meant we were going higher. So actually, this is what's called a market maker buy model. And I didn't see it at this point. As you can see, I'm still selling here. It's sold here. And it's going against me now. This is when I close the trade. Because if I can rewind a bit, oh no, I didn't close it. It hit my stop loss. Yeah, it's gonna hit the stop loss, the spread here. There we go. The trade closed. So what I'm gonna mark in a second, something I didn't see, I wasn't seeing here, is this gap here. This gap is very significant. As we'll see, as price trades some more, this gap right here is gonna support price higher in this range. Initially, I was looking for this level to resist price from going any higher and drive it lower below this level. That didn't happen here. So this is a change in delivery. This is consolidation, accumulating orders here. ICT says they're inducing sell orders. There's that gap that I was talking about. It supported price high and broke it out of this range. Now this is a signal that we are bullish. That's why I'm buying here. When the price gets back into this red rectangles, I'm also buying again here as price gets into this gap. Now you can see as I'm buying what the spread is doing. So here I'm trading some the pre-market session. It's a specific trading model. As you can see, these highs here that were formed at 1. Yeah, this is the account that I practice on. A lot of losses, a lot of wins, because I'm usually testing things that, like even this market maker buy model, it's a drill that I do, you know. So I was wrong earlier on. I opened a sell, one trade, and it was taken out. Here I have 3 buys. And this blue shaded rectangle is the shit. It's this one on the daily chart here that I'm showing right now. This one. It's a gap right there. This was the Asian session. I was practicing there. And of course, this is the AM session, the New York AM session. This is the pre-market. And of course, as price is moving, I'm busy checking other concepts, seeing do we apply in this slip situation, do we not apply. So at this point, I'm very confident in the bullish trades here that I caught. As you can see, price moved from the area that I traded in. I had very little drawdown here. The only drawdown is this trade that I entered as the market came into this box. Also the other one, this that I entered as the market was dropping here this week into a gap. This one. And then the price moved away, and then as it came back again into here, I entered the third one. But because of the spread, that's why I was quoted where I was quoted. because I'm using XM, this broker's spread is unforgiving. So anyway,
So descriptive like an adjective. I got a vendetta against people who patented being negative when you should be getting after it.
I'm targeting the previous week's high. That's Friday's high here. No, actually, this is not Friday's high. This is today's high. Friday's high isn't shown here yet. That's what I'm targeting. Get off of me, this ain't no humble brag. I want you to hear words, you can say them back. I want you to feel free from the chains that last, and to believe in what you got, it was built to last, yeah. Now that I've been put through hell, I never got anyone's help. I had to do it all myself. So like the intention of this video mostly is not to explain what I'm doing here, how I entered these trades and all, because it's a lot, as you can see here, it's a whole lot. But the intention is to show my attempt at being consistent with these entries, like looking for these entries, like that's what I'm practicing, like looking for these entries, identifying them, and being okay in moments when I'm wrong. Like earlier on, I was wrong, I was selling, but then again, I remembered that this blue shaded area here, like where we were, it was possible that we could form a reversal, consolidate, and as we were consolidating, that's when the trade closed. And that's when I noticed this gap. Waited for a signal, price broke high, and as it came back in here, that's when I was long. Initially, I didn't see this gap. I saw this, not this with support price, but actually I was supposed to extend this down like that, so that it encompasses this gap and a little volume imbalance between this candle and that candle. So you see now why I'm saying I'm not going to be explaining, because now, since I've mentioned the volume imbalance, now I have to explain what that is. And it's all there on ICT's YouTube channel for free. So why should I explain something that's already been explained by somebody else in more detail than I ever could? mistaken here, although the spread quoted me up there. We broke this high, going higher. So I buy as price goes down to get the most discounted, to try and get the lowest price that's being offered at that time as the market is moving. As you can see here, I'm on the 1 minute chart, and ICT, man, is trading below the 1 minute chart, like with seconds and ticks and stuff. And I suppose it's possible. I mean, he says price is fractal, which means what you see here is what you will see on all time frames. The scale or the degree, is what's gonna dictate whether it takes a long time to form or a short time to form. Here we're on the 1 minute chart, so it takes a relatively short time to form this pattern compared to if maybe we were on an hourly chart. But you would be seeing the same pattern. It would look similar. So ICT trades these things below the 1 minute chart, which is amazing. So yeah, that guy is the best to explain his stuff because he understands even how to address concerns around it. Me, if I was to make an attempt at teaching this, there would be some questions that would stump me. So today's high is actually up here. This isn't today's high. This isn't today's high. This is it's a London session high. These are London session highs. Overnight trading. So at this point we're targeting the overnight trading liquidity, which happens in London. So already at this point, it's already 1 hour 40 minutes that I've been watching these these entries here. And I keep doing all these things, to see for signals. Does price still have energy to go higher? All these points. If you see, I'm not explaining this green rectangle, but see how it's supporting price there. And I drew them beforehand. As you can see, there's very little that I'm drawing as price moves. Those are the things that I did not see, but the rest, they were there before price traded to them. Okay, I think that other trade got stopped out just now. This was the opening bell at 9:30. Oh, actually, take profit was a hit for this trade. It's not that it got stopped out. check. This green rectangle supports price higher. Obviously, if it broke here, I would have been expecting it to come down here, and I would be worried, if it broke these lows. This is exactly what I wanted to see happening. And there's take profit for this trade. However, it's closed. Hold on, let me see what's happening here. What happened to this buy? There it is, it's still active there. Okay. Okay. I'm being stupid. Okay, this buy is still active. All the trades are still active. It's just that it's 9:30 now. Price is opening. The market is opening. The stock market. Oh, and here's another target. It's a logical target. Boom. That was hit. It's one of the trades that were taken down here. I think it's two of them. So now, of course, since we hit this level, we're expecting some sort of a retracement down, preferably to this level, but this one also can be. But if I were to enter here, I would wait for this, which is below the halfway line. So this is the new day opening gap. What I'm measuring here is from open at 9:30 today, that gap, because that's where price closed on Friday. This is actually a new week opening gap there. That's where price closed on Friday, and this is where it's opening now at 9:30. So this is the opening range gap. Sorry, it's the opening range gap between 9:30 and 10 a.m. And the story around it is that we expect its midline to be traded to, which is exactly what happened here. And it opened and it gunned for it. It was gunning for it. And then it came back, it was supported by the first gap at 9:30. Came back into that. Of course, you can see that better on the 1 minute chart, not on the 5 minute. We are really close to target now. Those overnight highs, overnight trading. So there it is, that first further gap that I was talking about, which happened after 9:30. It supported price here. Price did not even waste any time, it just went straight on. First logical target was reached here. There goes the second, just taken. So they just took the overnight highs, overnight trading liquidity, and today's high as well. So now, as you can see, for this buy that's left here, I moved the stop loss deep into profit here. Since yesterday's high was taken, price could retrace back, but it's forgivable if it retraces back into this new week opening gap. So if price were to come here, I could move the stop loss to below it, as I think I'm gonna do here. Yeah, but it didn't. So turned there. Yeah, this is me trying to force something. This concept which is not applying here in these market conditions. So yeah. Yeah, what I was doing there doesn't apply. So that's why this is me getting greedy. As you can see, I just took the take profit much higher than where it was, and yeah, price is gonna turn here. I think this is where price turns. There are various other moments after this where if I was nimble enough, because this whole move was retraced, this whole move here after this low was broken. So my stop loss is going to get hit in profit here. This is the first clue that I was looking at here. There goes, my stop loss was hit in profit. So I didn't have the balls to enter short here. Now this is the market maker buy model. I was looking for this new week opening gap to support price high. However, here we had broken this low here, which is one of the signals that I look for. We took previous day's high and then we broke this low here. I wasn't thinking about that. I was too hyped up on the fact that I'm making money and it's just demo money. It's not real money. But anyway, broke below the new week opening gap here. So the logical thing is to expect this to be used to resist price lower. But of course, at the time I was looking at this hourly thing and I bought here thinking that it's going to support price. And of course, I gave away huge wins that I had made. Yeah, here, this was just me being greedy. Look at how many positions I opened. This is over trading, which is wrong. I know I was hyped up because I won those earlier trades. And as you can see here, I'm stopped out. Just gave back a huge portion of the winnings. And the balance was it was 10.8. After this, it went down to 10.5, so I gave away $300 in a few minutes. It took me 1.5 hours to make it, but I gave it away in a few minutes. So there you go. That's how that move was retraced. Yeah. So I'm practicing a lot of things that I'm trying to get right here. Also, my psychology as well. Like what you saw there, after I had made money, I then gave it back. Those are just emotions. And those are things that tape reading and also demo trading like this, as you watch the video, you can kind of like have them as a simulation of what happened in the past, and you can kind of like pick out, because you can relive you can relive those moments for a bit. But anyway, what I was showing here is a consistent model. Okay, I can identify it when it's going up, I can identify it when it's going down, and it relates to a certain time. I look for it at a certain time, and it repeats, and I practiced how to identify it when it's forming. So I could be here the whole day looking for it, or I could find it as I'm sitting down on the laptop. And it can take 30 minutes sometimes. Sometimes it can take 15 minutes, sometimes 10 minutes to reach target. But other times, like today, it can take an hour and a half, 3 hours, 4 hours, 6 hours. That would happen though in conditions that are like high resistance type of conditions, where you'll be nursing trades for like 6 hours. So that's where it's important to have like logical targets, not aim for like highs and lows, because on the 1 minute time frame, if you are in those high resistance conditions, you can have like logical targets that are like a wide distance apart from your trade. They're like offering many handles. So this of course is one of many models. Another model is what I was explaining at 9:30, how price is expected to trade into the halfway point of the gap between yesterday's close and today's open at 9:30. That gap between the open and the close, where the price opened above where it closed yesterday, which means it gapped higher, we expect price to trade down to the midway point between yesterday's close and today's open. Or where the price gapped lower and opened below yesterday's closing price, we expect price to go up into the midpoint between yesterday's close and today's open at 9:30 a.m. So that model is 70 to 75% likely to happen at 9:30 every day. So that's another model, but that's not what I was showing here. What I was showing here is the pre-market session, where we were targeting the overnight liquidity. So you can hear all these things that I'm talking about: overnight liquidity, overnight trading and shit. These are concepts that take time to like learn to grasp before you can get to a point where you are like identifying them on price. So that's the reason why I'm not gonna teach, okay? Because I'm not really looking to sell signals to anyone. I'm not looking to have a mentorship. Because the way I see it, if I can do this consistently, then signals and a mentorship where I have people who are paying me every month, that's hard work. This is easier. This is tougher to learn, but as an income generating model or tool, this one is easier and quicker. And yeah, at this point, I'm not looking to be teaching people or, selling any kind of service to people. But posting on YouTube, though, doing this, like my journey, that's something I'm strongly considering. And it has been advice from ICT, also Signals. He said we can do that as well. But dealing with people where you are serving them something and they've paid and they have that entitlement type of a thing. Because some people, even if they know that they're paying only for signals, they'll have questions. How did you enter this? And that time you are doing a signal service, not a mentorship. So yeah, all these concepts are freely available on ICT's YouTube channel. So I'm going to stop here now. I've shown what I wanted to show. So it's chilled.